October 25th, 2025. The world is waking up to a new economic landscape, one that few could have predicted just a few years ago. The global economy is still reeling from a trade war that has upended international commerce and disrupted the flow of goods across continents. It all began with sweeping tariffs on Chinese imports, a move that sent shockwaves through the business world and shook Amazon to its very core. For years, Amazon's vast empire was built on intricate global supply chains, with China serving as the beating heart of its operations. Suddenly, everyday products, phone chargers, kitchen gadgets, and countless household essentials were hit with heavy taxes, making them more expensive for both Amazon and its customers. Amazon faced a stark and urgent choice: absorb the skyrocketing costs and watch profits evaporate, or raise prices and risk alienating millions of loyal customers. The company's signature model of affordable, lightning-fast delivery was suddenly under siege, threatened by forces beyond its control. The tariffs exposed Amazon's deep reliance on China, turning what was once a strength into a dangerous vulnerability almost overnight. Executives who once prided themselves on optimizing seamless global logistics now found themselves navigating a hostile, unpredictable trade environment filled with new obstacles. This wasn't just a passing political squabble, it marked a fundamental, long-term shift in global trade policy, with consequences that would ripple for years. The tariffs were designed to decouple the US and Chinese economies, directly threatening Amazon's vision of a borderless, interconnected marketplace. Political borders had become economic walls, and Amazon found itself caught in the crossfire, struggling to adapt. The company, once a shining symbol of globalization, was now forced to confront a new, fractured reality where old strategies no longer worked. The rules of the game had changed overnight, leaving Amazon's future suddenly uncertain and its employees searching for answers. The trade war had redrawn the map for one of the world's most powerful companies, setting the stage for a dramatic new chapter in Amazon's story. In the days following the imposition of the tariffs, Amazon's Seattle campus was a hive of activity, buzzing with a palpable sense of urgency and determination. Emergency meetings ran late into the night, as executives from every division scrambled to devise effective solutions to the mounting challenges. Analysts worked tirelessly, calculating the billions in new costs that threatened to impact the company's bottom line. Teams meticulously mapped out supply chain vulnerabilities, brainstorming contingency plans to mitigate potential disruptions. The crisis forced departments to break down traditional silos, fostering unprecedented levels of collaboration and innovation. The top priority was clear: protect customers from price hikes and delays, ensuring their satisfaction remained uncompromised. Amazon renegotiated with suppliers, explored new shipping routes, and considered absorbing losses to maintain service levels. Internal debates raged on. Should Amazon take a public stand against the tariffs or quietly adapt to the new reality? Some executives pushed for aggressive lobbying efforts, while others cautioned against provoking the White House, fearing backlash. The company's identity and future were on the line, with every decision carrying significant weight. Every decision carried long-term consequences for Amazon's reputation and business model, impacting its global standing. The crisis tested Amazon's leadership, challenging its ability to adapt and innovate under immense pressure. The company mobilized for a fight it never expected, rallying its resources and talent to face the unforeseen challenges. Amazon's obsession with maintaining customer trust was now its greatest challenge, as it sought to uphold its core values amidst the turmoil. Out of the chaos and uncertainty that gripped global trade, Amazon launched Project Balance, a secretive, high-stakes initiative that would redefine its future. The mission was clear, but daunting: reduce dependence on China by diversifying global sourcing and building a more resilient network. Amazon dispatched teams to India, Vietnam, and Mexico, searching for new manufacturing partners and forging relationships in unfamiliar territories. Building new supply chains was slow and complex, requiring not just investment, but trust, negotiation, and a willingness to adapt to local challenges. Amazon supported third-party sellers, helping them find new suppliers, navigate regulations, and adapt to shifting market realities. The company orchestrated a massive migration of its supply base, facing logistical, financial, and operational hurdles at every turn. Project Balance marked a strategic shift, prioritizing resilience and flexibility over the relentless pursuit of hyper-efficiency. Diversified supply chains were more expensive, but they were also less vulnerable to geopolitical shocks, trade wars, and sudden disruptions. Amazon invested heavily in stability, aiming to absorb future disruptions, whether from tariffs, natural disasters, or political unrest. The era of single-source globalization was over, replaced by a new reality of distributed risk and adaptive strategies. Amazon was building a new kind of global marketplace, designed for a fractured and unpredictable world. The gamble was enormous, with billions at stake, but the alternative was existential risk, potentially threatening Amazon's very survival. Project Balance was more than a plan. It was Amazon's blueprint for survival in a world where certainty was no longer guaranteed. The tariff sent shockwaves through Amazon's logistics network. Chinese suppliers demanded upfront payments, creating cash flow crises for small businesses. Production slowed, shipments were delayed, and fulfillment centers faced bottlenecks. Warehouses designed for just-in-time delivery struggled with empty shelves and sudden backlogs. Shipping costs soared as logistics companies passed on their own disruptions. Small and medium-sized sellers, the lifeblood of Amazon's marketplace, were hit hardest. Many raised prices or saw profits vanish, putting their businesses at risk. The entire ecosystem, sellers, customers, and Amazon itself, felt the strain. Customers noticed longer delivery times and rising prices, especially for electronics and home goods. The seamless Amazon experience was cracking under pressure. The trade war revealed the fragility of global e-commerce. The hidden costs of a trade war were now impossible to ignore. In Washington, the Trump administration was unsympathetic to Amazon's struggles. Officials saw the tariffs as a necessary correction, urging companies to bring manufacturing home. Amazon's pain was framed as a temporary sacrifice for long-term national gain. There was little interest in offering relief to big tech. In Beijing, officials condemned the tariffs and retaliated with their own, escalating the conflict. China encouraged its companies to diversify exports and hinted at new barriers for U.S. firms. Amazon now faced a two-front war, U.S. tariffs, and a more hostile Chinese market. The company was trapped between the world's two largest economies. The escalating trade war left Amazon and other multinationals with no easy escape. The global business landscape was being redrawn by political power plays. The crisis didn't stop at Amazon. It rippled across all of e-commerce. Retail giants like Walmart and tech leaders like Apple scrambled to adapt. Tariffs disrupted supply chains, forcing companies to rethink sourcing and pricing. Online marketplaces like eBay and Etsy saw their small sellers struggle with rising costs. The dream of global entrepreneurship collided with geopolitical reality. International players like Alibaba and Rakuten watched nervously as protectionism spread. The threat of a fragmented global market loomed large. The era of a single integrated world market was under siege. The entire e-commerce industry faced a wake-up call. The trade war's shockwave was global, reshaping the future of online business. Wall Street reacted with alarm as Amazon and tech stocks plunged. Investors fled companies exposed to China, seeking safer domestic bets. The uncertainty poisoned investor confidence and rattled global markets. Economists warned the trade war could tip the U.S. and global economy into recession. Tariffs acted as a tax on businesses and consumers, threatening growth and fueling inflation. Venture capitalists grew cautious, and IPOs were delayed. The climate of risk aversion stifled innovation and entrepreneurship. European markets also trembled, fearing the conflict could spread. Global supply chains and financial systems were deeply interconnected. A crisis that began in Washington and Beijing now threatened the world economy. The financial world braced for prolonged instability. The fallout from the trade war was far-reaching and unpredictable. By late 2025, Amazon had weathered the storm, but at a cost. Project Balance diversified supply chains, but operations grew more complex and expensive. Consumers saw higher prices. The era of ever-cheaper goods was over. The world had shifted to regional blocks and strategic rivalries. Companies now factored geopolitical risk into every decision. The dream of a single integrated global economy was fractured. The crisis exposed the fragility of interconnected commerce. The challenge ahead: balance efficiency with resilience. Amazon's story is a preview of the choices shaping the future of global trade. The web of global commerce is more delicate and more vital than ever.